GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we've retired number go up as a strategy and replaced it with actually read the charts. I'm your host, Jay Hamilton. It's Monday, May the 5th. Today we are joined by Stefan Rust, formerly CEO of Bitcoin.com, now the founder and CEO of Truflation, one of my favorite companies in the economic data space that provides real-time, transparent blockchain cryptography backed data to actually give us finally accurate economic metrics, which we desperately need more of. Today, we're going to discuss the current strong economic data in the US. Is this a mirage? Are we headed towards a recession? What's Stefan's thoughts on what the real economic data is versus what we're getting from the Fed? We're going to talk about CPI and what the difference is between CPI and the Truflation data that they provide on a daily basis, whereas CPI only comes out every month and it always comes out 6 weeks late, which is ridiculous. We're going to talk about TRUF Token. This is Truflation's token. It's up 100% in the last 30 days. What's going on there? Is this a token you should be considering allocating to? And also, we're going to get Stefan's outlook on macroeconomics, the current setup, what's going on in the US, the trade wars, tariffs, the broken data system, and so much more. Going to be an absolute fantastic episode. Before we jump in, if you guys are swapping during these times, you should check out Milk Road Swap. You can do so at swap.milkroad.com. Why should you check it out? Because we got some of the lowest fees in the space. We set up this DEX so that you could swap low fees, not so we could make money, really just to help everybody out, to have a place where you can swap cheaper than Coinbase on a lot of the centralized exchanges. So don't swap there. Check out swap.milkroad.com. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, Stefan, welcome to the Milk Road Show.
Thank you, Jay. Great to be here. Yeah, glad to learn about the Milk Road Show and see that a lot of people love Truflation over here. And we've had a very popular community in Canada as well. So really excited to see.
Love it. Okay, let's start with what's your base case for the current macroeconomic environment? And you can take that any way you want. You can talk about inflation, you can talk about growth, recession, you can talk about the tariff, the trade war. How do you frame all of this noise right now?
The economic situation's pretty exciting, I'd call it, right? I think for the first time, we're actually really seeing a population, sort of a market shift. We're seeing it's really the US or China, right? I mean, which camp are you in? And I think, Trump is asking the world, whose camp and which side are you on? Pick a side. And if you're on our side, great. And if you're not, then that's clear too, right? And it will go the way. That's the way it's going to go. So that's the way we look at it. We see huge innovation taking place right now with AI, with crypto, with DNA, sort of lots of innovation in a lot of fronts right now. Unlock of regulatory hurdles that have been there. So a great time to be an entrepreneur. There's never a greater time. Number one, you've got all these new technologies. Number two, you've got a lot of the hurdles that were set and put in place beyond just a startup itself, but actually all these regulatory burdens, compliance, filings, legal documentation that you needed to submit. All of those are sort of waning and going to hopefully become a bare minimum of the hurdles that a startup has anyway. Hiring new people, breaking new grounds, proving out the concept, validating a product market fit, et cetera, worrying about money, funding, et cetera. So those are all the challenges you already have. And then you now you can just focus on those versus on the regulatory hurdles that you have. So I think it's a great time. We'll see a lot of innovation. We actually see inflation pick up a little over the course of the rest of this year and then come down once we see productivity gains, once we see the benefits of new energy supply in the market, new factories being built out and deployed, the improvements of the railroad infrastructure, et cetera. All of that investment will then bear fruit towards 2026.
Yeah, I want to touch on your outlook for inflation, but before we get there, You're an active investor. When you look at markets right now, how are you playing them? Are you sitting on the sidelines? Are you moving all your money into gold and Bitcoin? Do you think we're still in a bull cycle? Are we going into a bear market and this recession's going to actually will come to fruition and we're going to see the recession? What do you think?
So I'm fully invested. I have pretty much 95% of my wealth is in crypto across a large pool of assets. Obviously the stables, the big top ones, not only Bitcoin, but also you have Solana, you have some ETH, you have the usual sort of big ticket items, and then some altcoins, right? Really altcoins that we think are actually really going to grow. I don't see a recession coming. I think that's fear mongering. Watch what the big banks do, not what they say. They're all going to say recession because of tariffs. Why? Because they're not earning their billion-dollar profits and being able to pay those highly paid, bank, employees their bonuses. But in theory, they should be loving this market. It's volatile. There's lots of ups and downs. It's movements. But actually, I think now is a good time to get in as any. Continue DCAing. I think that there is only going to be upside. Anybody in big tech is going to be earning significant returns. And I think we're going to see in big tech, at least, the sort of layer twos. So it's not only going to be the Mag 7, it's going to be the next set of companies. Who are they? Who are innovating? In what categories, right? We all know defense is going to be a big area of spending. Who are the big defensive companies? Can we invest in them? What I hate about and what I loved about crypto was anybody can invest at any time. So if you did your research, you could actually partake in early stage companies and reap the rewards on the upside. In an AI game, in a traditional industry game, it's the VCs that benefit and capture the early gains. And they then get to offload onto the capital markets, where generally retail can only then participate when a large portion of the value has already been captured.
Okay, I completely agree with what you're saying. I want to shift to the economic data that we're seeing right now and your conviction for this economic data. So if we were to look at unemployment numbers came out recently. I can pull up a tweet from Truflation. So you guys last week tweeted, unemployment came out 4.2%. April payrolls was actually up 177,000 new jobs compared to the expectation was 138,000. This also makes it seem like the recession is fear mongering and not true. But then I wonder, it's tough to balance the timing here because so much of this economic data is so lagging, right? So is this economic data true? And then also these payroll numbers, it feels like over the past several years, they change it a few months later and you realize that the number was inaccurate to begin with. So can we trust this economic data, do you think?
So the payroll data, I mean, we have a lot of issues with the payroll data. We track and have a number of suppliers for the payroll data, ADP, job cuts. And we actually think that the market is still pretty strong. Employment's still strong. I mean, I don't know that exact number, that we haven't studied that, but Oliver and the team at Truflation are really, all the data scientists, they're working on a new employment metric so we can actually provide maybe a more accurate insight into what that number looks like. But all indications imply that the economy is still strong, employment's still pretty strong. And, the market does not anticipate a drop in rates coming up, right? In 2 days' time, right? This week on Wednesday. And, the contrarian upside is if you go to Polymarket or you go to Kalshi and you bet on an interest rate drop, your upside is going to be really big. So with a very small allocation, you could actually possibly make significant gains if you have some funds set aside and willing to put $10, $20 into that.
Do you think they might cut rates this week?
I've put that bet in, yes. I think there might be a surprise. We never expected it. When was it? In November when he dropped 50 basis points, right? Yeah,
September when he dropped 50.
right? So
yeah,
September.
nobody expected 50. Yeah.
And could we see another 50? Surprise the market, turn it around. He's got a lot of pressure from Trump and Besant to drop it. There's a whole new refinancing needed for the U.S. economy. 6 trillion or 9 trillion, depending what number you believe, that needs to be refinanced this year. And so that's a significant check size. And to do that, if you think about it, 10 years ago, we were in the ZERP days, right? Where interest rates were 0.5% or 0.25, right? And now we're at a spot where interest rates are nearly 4.5%, 5%. And so with that number, that has a significant impact on P&L if that needs to be refinanced. And I think going from finance from 1, 2 year bills, 3 year bills to actually 10-year bills and locking that in for a longer period of time, is you want a lower interest rate in order to do that.
Yeah, of course. Yeah, and
you don't want to bring it all down in one go. He's got to gradually drop it over the course of the year.
Yeah, it would definitely be a shock if rates got cut this week, because it's not what Powell has been telling us in the past FOMC meetings. But as you said, it wouldn't be unlikely. They have shocked us in the past, so we could see that happen. Let's take a look at inflation data, because this is where Truflation really got its start and what Truflation is most known for. And every time there's a CPI print, we show this. And let me just show this so everybody can see the difference in the inflation data. So Truflation provides a daily metric for inflation. Right now, it's saying it's at 1.45%. Okay, if we go over to CPI, which is what the US provides as their inflation data, they're saying it's 2.4%. This is March inflation data, though. The April inflation data comes out in like a week in mid-May. So there's always a delay on the data coming out, whereas Truflation does it always in real time, which is fantastic. Why is there such a difference between these data? Like, why are you saying that there's Truflation saying 1.45%, but CPI is saying 2.4%?
You can actually, if you log into truflation.com, we now have listed the BLS number, and you can do a compare to the two. You might have to be a premium subscriber to be able to do that.
Well, you got to hook me up there, Stefan.
I will hook you up right after this. I should have done it before this, but I will definitely provide you, and we'll give you a referral link. So any of your customers that want to sign up, they can also get a discount and also participate in getting information. What we will do, by the way, sort of 2 days in advance of next week or 3 days, we publish our prediction and forecast in terms of where inflation will come out at. But why are we different was the question. And the main reason is when we first launched, it looked at how the BLS was aggregating number. I mean, they are so old. They were doing it manually. They were only tracking some 50,000 items manually. And they were so bad at it that they'd had to go back and edit the data afterwards. And so what we said is, man, this is so old school. Why don't we just take API feeds, take a developer mindset to this, and then put it on the blockchain so everybody can see how it's calculated? And so, that's sort of what we did. We track, for the US, we track about 30 million items right now. For every item, we have 3 price feeds. And all of that is visible and accounted for on the TRUF network. So we actually today have permissionless, cryptographically verifiable source of truth for real world events in real time. And so I think that's something that nobody else did. And that's why we're different. We're basically 45 days ahead of the Bureau of Lagging Statistics.
I was gonna ask what BLS stood for. I was like, keep saying BLS. Is that what we're calling it? The Bureau of Lagging
That's what I called it something else, but then I got told off for saying that. It was too hard.
Well, that's the PG version.
It's actually the Bureau of Labor and Statistics.
I know.
So they're the guys that do the employment numbers. And again, they do it manually and they do it so inaccurate. They have to go back and edit the data all the time.
And so regardless of Okay, so we're getting different data, but the main thing that we're seeing is inflation is coming down.
Yeah.
Both data sources are saying that. Your Truflation is saying inflation is lower, about
Yeah.
1% lower than what CPI is showing, but both are showing a downwards trend. What's the story that inflation has been telling us over the past years, and what do you expect to see moving forward? Are we going to go into, it's really difficult to figure out where inflation is going, because I think two things are happening right now. One is you're hearing a lot of people saying on the day-to-day cost of living, yeah, like there's inflation and my groceries are more expensive and whatnot. But then the data shows that inflation is coming down. Then on the tariff side, you're hearing two stories. One is, oh, this is going to cause massive inflation because of all the supply changes that need to happen, new factories need to get built, all of that sort of stuff. And other people saying, oh, it's one-time transitory inflation, we're not really that worried about it. So there's so much noise around inflation. How do you frame inflation in terms of where it is now and where you think it's going to go from here?
So bear in mind, inflation means the increase in cost of living for the basket of goods that people buy on a regular basis, on a consistent basis. And what has happened accumulatively over the last 5 years, we've seen an increase in costs of 25% across the board. That's huge. That's huge. A quarter of your purchasing power. Whoosh, gone, right? So the size of the table, the food on the table is a quarter less of what it used to be. So the cake is only, 3/4 the size of what it was. And so if you imagine from that perspective, inflation has really hurt everybody significantly, over the last years. However, if you look at it on a year-by-year basis, the increase in cost has significantly dropped. So we're now down at what we think is 1.4% inflation over the same period for that basket of items as last year. So same time last year. And so that's sort of where we're at today. Where is this going in the future, right? So everybody's saying, cost, tariffs is going to drive up the costs, right? And we actually don't think that's going to happen. What we're actually seeing is that the costs are being pushed down the supply chain. So look, the consumer will not cover and carry any more costs. We're seeing decline in Walmart purchases. They can't raise the rates. People won't go shopping anymore, and they won't be spending more. They'll spend less, and we don't want to see that happen. And so what's happening is the supply chain is trying to push it down everybody in that supply chain, right? So I'm an importer of goods, or I am a retail outlet. I want to make sure I can pass the cost of tariffs back to the supply chain and all the way down to the raw material. Critical raw material is got tax exempt, right? So critical to specific industries, to specific items, to specific goods, they are doing and changing that. And in fact, all the tariff negotiation has really about resetting a hook, laying out, we're going to put the hook all the way over there, but we'll see where we end up. We won't end up all the way over there, but it's shocked everybody, and it's done it in one fell swoop. So everybody's impacted, everybody's at the table, and you're driving negotiations really fast to come to a resolution. Will it be that fast? I don't know, but will it be the ones that actually engage quicker? I think will benefit earlier.
So you're not, you're not worried about inflation right now?
Not from tariffs. I'm worried about inflation from investments that are going to be coming. We saw all these announcements associated with investments from all the different multinationals that have coming, or even domestic, Apple, Nvidia, everybody announcing new investments. So number one, that's going to be a tight demand on skilled resources. Where do I find those resources? They're going to go up in costs, those resources, because there is a strong demand for strong talent. We have to see new infrastructure rolled out. We are going to see new data centers being built out. So, real buildings construction workers. I need material for that. I'm going to need electricity. I'm going to upgrade my grid because energy is what powers, number one, an economy, full stop. But also, more importantly, this AI technology. How do we start investing in that? Who's going to be the beneficiary around that? Oil companies are going to benefit from that. The people supplying all the conductivity materials, AC, DC supplied converters, et cetera, right? So I think there's going to be a cost in infrastructure that will drive inflation.
Okay. I want to talk about how we solve this problem with our current economic data and how Truflation is solving that. And then I want to talk about TRUF Token. But before we do, we just need to take 1 minute to hear from our sponsors who make this show possible. Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCSUSDL is gaining traction at milkroad.com/Coinshift. Okay, we're back, Stefan. So if you're an investor, one of the most important things is to have strong data to make your decisions based on. Right now, we rely on a lot of data that, as you have pointed out, is archaic. It's the way it's calculated is very archaic. It is not real-time data. Let's just talk about, let's talk about this problem with our current economic data, but more importantly, let's talk about how do we solve that?
Yeah, I mean, it's GDP. I mean, we want to tackle a whole bunch of data sets. So one product that we will be launching pretty soon is the PCE price index, which is, so what we do is the CPI tracks the consumer goods and the price movement of the consumer goods. And what the PCE does is track where people are spending their money and how those goods are, or how the spending is changing. So are there habits within, are you not buying steak, you're buying sausages, you're buying hamburgers instead of a ribeye or whatever it is, right? Or you're swapping chicken out for, maybe chicken's not a good example, but maybe you're swapping out, chicken, or you're swapping something in for eggs for the protein, for example, because the eggs are too expensive. But that's sort of one index. And what we just want to do is track more unemployment data. We talked about that earlier. How do we start doing that? We already work with big providers like ADP, Challenger, daily job cuts, and the government statistics to then be able to blend those out and identify what is there. How do we get into GDP? That is the real metric that we really want to track. How is the economy performing outside of government spending? So if I'm giving, and I think
that's what happened. That's what happened the past, during the Biden administration in the U.S. Right? Is like we showed GDP growth, but we didn't really have GDP growth. We just had government spending.
Exactly, and it's I'm giving to, and then as Doge highlighted, it's going nowhere, right? I think 10 cents on the dollar is actually going to the cause that it was meant to go out to. In the UK, we found that 35 to 45% of GDP is government spending. So you look at those net numbers and it's like, why? What is the productivity in government spending that I'm getting? Okay, if it's going towards building a hospital, then good, great, right? But is it actually doing that, or is it just going into more administrative cost to managing and doing paper flow associated with administering that hospital, right? And that's what, unfortunately, we've seen a lot of government spending go towards, and that is what has really held back the growth of these economies. And then whereby on the flip side, you look at China, I just got back from Dubai. I mean, the infrastructure rollout, the roads, the buildings, the high rises, the hospitals, the hotels, the undergrounds, the trains, you name it. It's just really amazing. Power plants. It's like amazing infrastructure rollouts that we've sort of fallen behind in the West, if you will, and tried to justify it through, we're much more efficient in tracking how the money is being spent or not, or we're just allocating it to things that don't really add productivity in the market.
Mm-hmm, mm-hmm. Yeah, I mean, it's a difficult problem to solve, because as you start talking about it, you realize that it's a systemic problem from the government all the way down through these massive organizations that are not going to be simple to solve. But what is so impressive to me is Truflation is taking a shot at solving a somewhat impossible problem, right? A very complex problem. I want to talk about Truflation Token, which you launched about a year ago. Am I correct in saying that?
We launched exactly April 9th last year, 20. Yeah.
Okay, so just over a year ago.
Yeah.
Token started off really well, got up to almost 70 million in market cap, and then dipped. A lot of the crypto market dipped. So you're certainly not the only one that dipped. You launched at a time when everything was good. Post Bitcoin ETF into March was so good last year, and then we went into a bit of a pullback, sustained. I would say maybe not bear market, but a flat period through the summer. Sell in May, go away is what everyone did last year. We'll see I don't know if they'll do the same thing this year. But give us the story of Truflation Token. And then in the past 30 days, actually, I should point at this. The past 30 days, you're up 2x and back on the rise again. Again, markets are doing better. So is the Truflation Token just following the market right now, or is there anything that is impacting these dips and the recent rise?
I think we're outperforming the market right now. And our goal is to outperform the infrastructure category on CoinGecko and CoinMarketCap. So our team is wholly incentivized based on those metrics. So we did a TGE. So first of all, we went out and raised money. We started some 4 years ago. We tried to raise money in the market. We were very lucky to immediately have Balaji and Chainlink and Fundamental Labs and C Squared and others support us at the launch. That got us off the ground. So we actually built out something a bit better than an MVP. And we started aggregating more and more data sets into the market and really tried to spend a lot in growing awareness and educating the market on what is inflation. We launched a calculator. We did the aggregate Truflation metric, so people could actually really see what and how it was impacting and where it was impacting them with the calculator. We built out bigger partnerships and decided to do all of this with a token. Why? Because ultimately, this is the new form of venture capital. We wanted the people to have more and more influence in getting access to cryptographically verifiable real-time events. And how do we make that possible? We really wanted to put that on the blockchain, which we did. We worked very closely with Chainlink. We made all of this available through the Chainlink Oracle. And ultimately, any chain that was subscribing to it could get access to this data. So that was what we did, number one. We then decided to list before the halving. That was a key metric that we wanted to beat. We went out despite some hiccups with some of the exchanges that didn't want to. They wanted us to push it out, but we wanted to go out. For me, it was just essential to get out before the halving. We did really well. We went up to $1, which put us at $1 billion in market cap, much better than anybody else predicted, even ourselves. We never thought. We were hoping for maybe a 20-cent price bump, but the market really loved what we were doing. So we did really well. And then the market tanked. We came down to about a 20-cent market, but a lot of the investors still holding on to their token. A lot of the investors had lockups anyway. So very few people could actually exit out of the market. So we were all, and to be honest, most people that invested believed in the products and want to see Truflation exist and supplant the actual BLS. And so we were very fortunate to have strong believers in what we were doing. A lot of investors, and I met a lot of them, they didn't want to invest. It's like, why do we need this? We've already got the Bureau of Labor and Statistics. Just predict what the government's going to do. Don't worry. We don't care about your number. And so the believers held on and are still very strong holding on, which is very nice and encouraging to see.
Mm-hmm.
But
go ahead.
Yeah, we then had we sort of held around 25 cents, 20 cents, and then we had a big event occur, which totally surprised us. We were hacked by the Lazarus group. So they came after us. I don't know why, I don't know how, but we managed to get 2 computers infiltrated with a virus that was tracking a lot of the movements on our computers and took control of the computers. And ultimately, they got a hold of some 50 million TRUF tokens. And in addition to some other funds that they got a hold of. And yeah, that really knocked us off from the 20 cents, brought us all the way down to 1 cent. But we fixed that. So we turned that around. The team worked tirelessly, relentlessly to convert that, to turn that around, fix the token issuance, work with all the exchanges, work with the FBI. We were working with the Swiss Cybercrime Unit. We were working with Tether. We still are working with Zero Shadow, amazing organization. I can only speak really highly of the sleuths and the private investigators at Zero Shadow, far better than any of the other institutions we worked with. And anyway, and so we got to the bottom of it, fixed it, returned around, and now we're sort of coming back. And I think the market is rewarding us for this turnaround. We've also actually, in the same time, continued to build. We did not stop building. We continued to actually build out the TRUF network, and the TRUF network, for which all of this data is powered by the TRUF token. Anybody can now access the TRUF network, can build their own index using verifiable real-time events, real-world events, and be able to build out an index, be able to build out a graph, create your own Truflation if you'd like to. And those are things that we've now made available on the TRUF network, and actually acquired Quill technology, which was the underlying tech which we built on, and the team, we took over all of the technology from the team and are now running with that on our own. And so ultimately we've become this infrastructure play using SQL. So no developer needs to go and learn a new programming language and learn how Solidity works. You can actually just work. 50% of worldwide developers know how to work with SQL. So ultimately you have, some 15 million software engineers out there that already can build functions and features on the TRUF network without having to learn anything new using our SQL smart contracts.
It's fantastic. And kudos to you and your team for how you handled the hack and the Lazarus situation, because that's just an awful situation that nobody has ever prepared for. But you navigated it very well and did so in a transparent way, as has been your ethos throughout the creation of Truflation.
Thank you. Yeah, it was it's definitely not a nice feeling. You have no idea where it's coming from. It comes out of the blue. And then only when you do the inspections and the audits but I mean, we have learned from that as well. We've definitely upped our security process.
And that's the main thing is that you take it as an opportunity to learn, obviously. When we look at the Truflation token, let's talk a little bit about the utility of this token, because this isn't just a lot of tokens in crypto don't have utility, right? A lot of them are just, speculative assets at this point, right? Now, utility is coming and regulation definitely slowed down utility. And so we are going to see more, but let's just talk explain the utility of the Truflation token and the role it plays within the ecosystem.
So the TRUF network is basically has a number of node operators, as we call them, that host and maintain a mirrored database. And that database maintains and has we call it the Roadrunner, which is based off, sort of modeled a lot on the Bitcomet, which is the Cosmos BFT algorithm, so Byzantine fault tolerant consensus algorithm. And so we've built out this database so that any verified provider and calculation done on this decentralized database is actually verified through a consensus algorithm. To write to this database and to access this database, you need the TRUF token. We have over 100 million data points now in there. And like any network, you're constrained by the streaming of that data on that network. And so how do we enable that? How do we provide compute so that you can calculate indexes and verify the data on the network? How do we enable the storage so all of the history is visible in the story, right? in on the network, right? So you can actually go and see how the history of that index of that data set performed. And then lastly, the frequency. So I need to be able to update this daily, by the second, depending on the data set, or by the month, depending on the data set. And so those are three capacity requirements that anybody accessing and reading the data will want to have. In order to do that, you need to pay TRUF tokens to be able to access that data set. We work Truflation. Think of Truflation as an app on top of the TRUF network, consuming data, but also writing a lot of the data to the TRUF network. We have index.fun, we have Limitless, we have a lot of prediction markets that will be accessing real world events. Why? Because they're timely, they're different in the crypto world. You don't get access to a lot of this information in crypto world. Nobody else has all of these events that are real world events that we all are emotionally attached to in some way, because in the physical world, we experience all of that. And so that's really, I think, where we really want to spend a lot of our time and attention on over the next sort of 6 months, 12 months.
Mm-hmm. Yeah, fantastic. It's very interesting to see more of the crypto projects use their token in this kind of really new experimental way, where you need the token in order to use the product. It gives you extra access. I mean, in a not to compare your token to Trump token in any way, other than the fact that they both start with the same three letters. But recently, we did see a very interesting experiment with Trump token when they had their token unlock. Was it last weekend or the weekend before? Yeah. And everyone thought, hey, this token's going to crash. There's a big unlock coming. There's a lot of investors who are going to, obviously sell onto the market. And then they announced that I think it was the top 200 token holders got access to meet Trump at some dinner, and the token went up, right? And you can see these experiments of using a token within your product and building utility. And that's, I mean, again, no comparison between your two tokens, very different and very different business. Trump token is a meme coin. I want to be very clear about that. But it is incredible to see you experimenting with how the token can have utility and the usage within the network. And that creates a reason for people to hold it, and a reason it's not just a speculative asset anymore. It does also have real usage in the network. For our audience who are investors and who are always looking at new opportunities, what's the investment case? What's the investment thesis for TRUF token? Why would they consider holding TRUF token in their portfolio?
So we're very much focused around the financialization of real world event data. What does that mean? What we're trying to do is enable really prediction markets to trade on some of the real world event data that we have. Number one,
what's an example of a real world event data? Like, are we talking about CPI being an example?
Yeah, CPI would be a real world event data, right? I mean, it would be the price of a stock, the price of, anything, the price of eggs.
Right. So it's financial data, like financial data being able to, okay.
Yeah. or weather data, right? We have shipping data, right? What's the cost of a container from Hong Kong to Los Angeles, right? What is that? What's the cost of, what's the temperature in Embarcadero in San Francisco going to be like tomorrow at 3 p.m., right? And things like that. So those are elements that we have on the Truth network. And why is all of this so important in the CPI calculation? Not necessarily in the calculation itself, but in the prediction of where all of this will go. And hence why prediction markets are the new financial source of news. We really believe that that's where you will see where people really think the market is going to go. And generally, the market has a pretty good feel for where things are going to go, especially if you take into account weather data. You have shipping costs, you have tariffs, you have other elements in terms of cost of goods, cost of raw materials, cost of commodities, cost of oil, et cetera, et cetera. So all of those have an impact on the price of goods in terms of where the price of goods are going to go. So future, prediction, outlook. How do we bet and take contracts on that? And there's a whole derivatives industry around that. Just alone in weather, it's a $26 billion derivatives industry. And it's not just betting on the weather, how hot will it be, but it's coupled with futures contracts. So I know that if the weather tomorrow is going to be 40 Fahrenheit, then I need to get heating. I need to buy oil. So I want, in the event that that does happen, I want to be able to buy the right to purchase oil at this price at that point in time. And if that expires, then it's okay. It was an insurance policy. If it doesn't, then I can call on it because the weather hit. I needed to buy oil because I needed to provide heating, et cetera, right? So all of those are real world activities that we see, or we don't even see that because it's only done by the privileged few that can participate in that. And as we democratize more and more of our financial services and financial data, how do we allow everybody to be able to participate in this? So the small farmer in Sri Lanka creating, amazing cinnamon can also partake in such an event when a storm comes. What does that mean? What does that look like? And how can he hedge? Or how can they hedge themselves against that?
Fascinating. It's a massive vision and a huge mission that you are taking on. Shout out to you and your entire team. I want to come back to what you said earlier. For everybody who is listening in, if you want to become a paid subscriber of Truflation to get access to some of these data, we'll throw a link in the show notes. Well, if you guys are listening on Twitter, you'll have to check out the show when it comes out. It'll come out in a few hours when we publish the actual. We'll throw a link in the show notes, or if we can get a link from you, Stefan, we'll throw that in. But truly appreciate you joining us today, Stefan, and breaking it all down for us. And give high fives to your entire team for trying to solve this massive problem for us, because we desperately need Truflation.
Yeah, and that's why we also want to do more data. I mean, we started going into more markets. We worked in the UK. We felt that was similar to the US. We worked with the Argentinian government. So the Department of Commerce, where under the previous administration, the Department of Commerce head, fudged the numbers, for saying it politely, so that they wouldn't have to pay such a high interest rate on the loans from the IMF. He ended up going to jail. But now under the new administration with Milei in charge, his tech team invited us to Argentina to go and actually see how much of government data sets and commerce information we can digitize and put on chain and calculate inflation, so that they have a second party that they can reference to providing inflation metrics. India, a whole different other market where there's very little technology available for a lot of government statistics. However, an extremely savvy mobile application market where people are doing all their purchases and either through WhatsApp or through applications on their mobile phones. And so how do we get access to that information? How do we capture that? And that's what is allowing us to mature and improve the network every single time we go into more complex markets.
Wonderful. Stefan, thank you so much for joining us today. Thank you for your time. Really appreciate it.
Thank you very much, Jay, and hope everybody enjoyed it. And yeah, like I said, please sign up. You can actually get and take advantage of the data that we provide on Truflation to actually help you protect yourself against losing 27% of your purchasing power.
No better tagline than that one right there. Thanks for listening in, folks. Truly appreciate your time today. Before I let you go, I got to tell you quickly, tomorrow, Tuesday, May the 6th, Kyle, co-owner of Milk Road and head of research, you guys all know well, he's on the show all the time. He is having a debate, gold versus Bitcoin. Obviously, Kyle is defending the Bitcoin side. He's going to be debating Peter Grosskopf, that's a tough last name to say, tomorrow, 12 p.m. Eastern, May the 6th. Check it out, gold versus Bitcoin. We will link in Twitter if you want to attend that debate. Thanks so much for listening in, folks. Have yourself a wicked awesome day. We'll see you guys back again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.